Good day. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for a very quiet, extremely quiet Wednesday, January 13th, 2021. And let's go into the market. As you can see behind me, it's a mixed color of boards. The day was spent watching history being made as the House of Representatives again voted on a second impeachment for the term of President Trump, and they passed that with 10 Republicans joining, I think it was 222 Democrats for it. We get more economic data tomorrow, and I mention that because the market's going to immediately shift gears now into economic data. You'll ask why? Because Mitch McConnell already said there are 7 days left before the next inauguration, January 20th, a week from today. Congress would be best served to focus on that. In other words, the parlance, he doesn't think the president get a fair trial in 7 days. He'll pass the baton on to Chuck Schumer and let Chuck Schumer and the group handle it from there. I still question what the president's going to do between now and then. There's going to be partisan galore. The president's lost his social media ability. He did make a call literally 2 minutes ago for peace in the United States, and with all this going on, not there to be any uprising. It's not what he stands for, and blah, blah, blah. Okay, so now we go to the charts. How's that? As you take a look, you are caught in the middle of no man's land. Remember what I've been saying? You're just bouncing up and down here, really not going one way or the other. When we take a look at swing lines, it sort of clears things up. You have an uptrend with higher lows and higher highs. That uptrend would give way to a downtrend if prices just hit 145.74. That could give you, if you don't make a higher high than this, lower highs, lower lows. When we look at where the 18-day average is, that would be under that number. So, something you have to consider. The bulls have to defend 146.63 and not allow the market to get under there if they don't want to lose control of this market. Assuming they keep control, a target could be 153.83. If they lose control, will it go back to the 139.42 level? The market is in overbought territory. It says got a reading over 70. So I think the bears would get the play here if that happens. But right now, no, you're not playing bearish until that occurs. You assume the bull trend will stay in place. Support will come in at 146.63, and the target remains where I just said. When you come to the semiconductors, you can see that the market's trying to develop an embedded reading. Both numbers today were over 80 in the slow stochastic. They were over 80 yesterday. The day before they weren't. You need 3 days in a row to confirm that you're embedded. Tomorrow's an important day. I think the market's going to be lower to start the day off tomorrow, just the way the chart action is. We'll see what gives with that, if it embeds or not. That will trigger another round of how to trade. The Gorilla Glue trade is still at work. What do I mean by that? Notice how literally every day you keep hitting this upper black band, the Bollinger Band. That began 1, 2, 3, 4, 5, 6, 7, 8 days ago, almost 2 business weeks. We'll see if the market backs away from it or not tomorrow. When we look at the industrial sector, SPDR, overbought, in an uptrend, higher lows, higher highs, but it's hit upside targets, and the resistance is that upper Bollinger Band at 90.60, and it's giving the market a fit. Market's having trouble getting away from there. Now, a lot of people think industrial sector is going to be strong this year, so maybe we get an opportunity at a lower price, but I don't think the bulls are going to support the market very much here because you're overbought. It's not bearish, but I just don't think they're going to get the bullish support. On the energy SPDR, the market is overbought. It's been trying to run against the upper Bollinger Band and unable to push out over it. I think the market's spending an awful lot of energy to the upside, and it wouldn't surprise me, and I'm not calling the top, just wouldn't surprise me if you get a correction from this situation. I'm not calling for a bear move, a correction. It is certainly, in my opinion, not a fresh buy against the Bollinger Band. In QQQ, the trend is up. You have higher lows, you have higher highs. The market is drifting right here in an overbought condition with both legs of the slow stochastic. They're called a K and a D line. The red's the K, D is the blue. Just drifting overbought. That's not the same as embedding. I don't see anything to do there because of that situation. The emerging markets, drifting. Is it going to lose that embedded reading? That's going to be the interesting thing. Why do I say that? Because so many people are one-sided on this. When I see everybody's on one side, I haven't seen an analyst on TV that says, no, you don't want to be in emerging markets. When they say, what's your favorite? Well, I want to go to Russia. I want to go to South America, invest. I want this, the emerging markets. Okay, I'd be watching that, okay? Just because I'm a contrarian when I see momentum wavering. Do I have a reason to be bearish yet? No, but lose the embedded reading I would. Until it's lost, I think the pros are still buying, driving it up. Remember, until an embedded reading is lost, it isn't lost. And if you fight it, you get hurt. Let it be lost, then you can make other decisions. It's right now just drifting. In the gold market, I'm still looking at this 200-day average as the area of support. Gold got very quiet today, as did so many markets in the financial arena. You've been in a downtrend, stalling out in an oversold condition. If it tries the downside again and gets through 172.49, then 171.16 or wherever the Bollinger Band comes in tomorrow could be your next level of support. I'm still not friendly in the gold miners, same thing. And I do realize that, I was listening, I was on TV just a couple of days ago on Bloomberg in Canada. And we were talking about the marketplace in terms of Barrick Gold and some of the others, and how a lot of traders are liking the gold miners because the PE numbers are low. I get it. I'm not arguing that. That certainly makes sense. But the question for me isn't PE. The question is the chart action, and there's nothing on this chart that is friendly. If this market goes lower, it could go back down here. It is oversold. I can't imagine me telling my clients, hey, this is the spot you start selling. In TLT, I have been expecting a bounce in the market, not a change of trend. It's exactly what we're getting. I said that because you had 4 days in a row under the lower band. You popped up and came back up from there. As we get over to the FXE, the euro, you see that you have lower highs, lower lows. The battleground, the lower Bollinger Band in an oversold condition. To break the downtrend, you need to get back over the 114.63 level, and that would be a sign that the market has gone from its high to its low bands and run out of momentum. At this point, oversold doesn't interest me in pushing oversold conditions against the lower Bollinger Band. I want to remind you that I now do my SPDR ETF videos at 8:40 in the morning. So I changed the time on them. I love doing it earlier for a lot of reasons. Number one, the market is open. Number two, I'm able to correlate with you right then and there what's going on in the futures markets, and I think you get a lot more information from it that way. I was doing it in the afternoon, but then you have to look at the futures, and now I'm able to tie things, I think, even better, and I know that. Now, I have 35 charts here. I just counted before I shot this. I'm doing 41 charts right now on the SPDR ETF, and I'll probably add a few more. So when I review in the morning, it's right now 41 charts, and I do rotate a few of them in and out for what we call the hot, the very popular ETFs that come and go in their popularity. I'm not going to do too many more, but I'm in that ballpark. So as you put it together, what's my goal there? I want to give you first the information of the day as it's occurring, right then, right there. What is the market looking at? So you're going to get technical analysis, you're going to get the fundamentals, you're going to get the news of the day, and maybe that gives you the confidence for the trigger you want to pull on trades for that. These are just some of what I'm covering. As I said, I'm now up to 41 of these markets, but they're all fit within these different categories that I have here, and I do rotate a bit. How do you get this? Well, it's simple. You can do a couple of things. Number one, you can purchase it, $8.95 for the first 30 days. We do offer a free trial. If you go to our website, all you need to do is click on, you'll see free offers at the bottom, sign up for that, and away you go. We'll get you on this immediately. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.